Well, thanks for tuning into this conversation with Mr. Anil Jain of Jain Irrigation. They've concluded a landmark deal, and it's a pleasure to have him to tell us what does this mean for the company, what does this mean for the outlook for the next few quarters and years as well, and the immediate near term too. Mr. Jain, great having you. Thanks for joining in. I'm Neeraj here. Congratulations on this deal, of course, and I hope all is well.
Yeah, all is well. I think it has been a really good deal. It took some time to make it happen, looking at circumstances around the world. But it's a deal where ethos are based on really medium to long term, because world is having this whole climate change issues and lots of challenges. And our company was already operating quite well outside India, and since last almost close to 15 years. With one headquartered in Israel and another in US. And we were serving also about 100 different countries. But with our own size and the financial constraint, there was only so much we could do. But I think with this market deal now, we are creating a much larger entity globally, which can address climate change, which can reach out to large number of growers, and significantly grow from where we are together.
And would you say that that is the highlight of the deal according to you, or also corresponding it the kind of debt reduction that comes in and the ability that it gives you to focus on internal growth domestically is also an added highlight?
So I would say, if you're looking about 3 or 4 different highlights. So what I talked about was one, where this MergeCo is a great platform globally going forward. That's one. The second, which is very critical and important point, and that's the reason how we started thinking about this, was to ability to deleverage ourselves, right? And this deal allows us to pay off the overseas OpCo debt, as well as the restructured bonds which we had in Singapore listed, about $225 million. All of that is going to get paid, right? So that creates an ability to reduce substantial amount of debt, almost 45% of our overall debt, which is close to 2,700 crores. So that's, I think, a very big part of it. The third part, I would say, is the association with somebody like Temasek. Temasek is a globally well-known name. They are sovereign. They have a lot of focus on ESG, right? And we as a company, we have always pioneered ESG in this country, as a family since last so many decades. And so that combination to create that aligned ESG platform with the values which are in long term. Temasek also doesn't just buy and sell companies. They invest really for long term, and which is same with our view. So that is the third part. The fourth part, the highlight, would be a possibility, which is no certainty, but possibility, that we will be doing something more with Temasek in India. Again, once this deal gets done, closing happens and things get stabilized, I think next step would be to try and explore what we could do with them in the entire agri value chain. And as you know, we as a company are not only in the drip irrigation business or planting material piping business, things which we provide to farmers, but we are also a large processor of food. We are largest processor of things like mangoes, bananas, guavas, onion, garlic, and so on. So there is that part of the business which is global, which has a business in India and business outside India. And I think that also has a lot of potential. We do also spice processing. So the deal has, as I said, there are multiple parts. Something which is related to the past and moving away from the legacy of high debt. Something about creating a greater global international platform. Something about getting the ESG platform set for the going forward. And fourth is a possibility of to work along with a global sovereign to bring even more change in India. The fifth part of what is the end result of all of this, right, is that the debt comes down. But more important is focus comes back on India for the remainder of the business. So the remainder of debt, which is in India now, let's say about 3,300 crores, including food business. Our next target is that over next, couple of years, 2-3 years, through internal accruals, improved cash flow generation, how do I further reduce that debt as well? So I think there are 4 or 5 parts to a transaction, and all of them are, structural in a sense. It is going to put the company on a very different path going forward.
Interesting. I would love to talk about that, and therefore I'll request 5 more minutes from the allotted 10 minutes that we decided, Mr. Jain. A quick follow-up on point 4 first, and then I'll come to all the other points. But point 4, I heard you mention that there could be a possibility of something happening in the future. I know it's too far out, or maybe it's not in the public domain, so I can't ask you for too many details. But can you tell me, have you thought about the nature of any transaction that you might want to do with Temasek or anybody? Could it be a stake sale? Could it be a new joint venture formation for new business? Of what nature could any kind of alignment with anybody be?
It could be various things. I do not know, well, people may not have that much of memory. Temasek was a shareholder in Jain Irrigation in 2005. And when they were shareholder, they exited, I think, 2011 or 12. I think they made multiple of 5 times of their investment. So they have happy memories of dealing with Jain Irrigation. They were shareholder. They had, for a point, even a seat on our board. So, we have been through that process with them. So there is a long history and a good relationship. So the new relationship within India, it could take place through that route. It could take place also to create new, I think there is this discussion about the climate change, carbon credit, how we can help farmers to generate, and conserve the whole carbon story. And then that could also be monetized. So that could be another venture. So there are multiple, but I don't think it is right at this point in time to concretize those or say. But opportunity and looks like certainly it should happen.
But you are talking about doing something on that regard with Temasek already.
Yeah.
Okay, great. Some numbers, Mr. Jain. As I looked at FY22 numbers, correct me if I'm wrong, but finance costs were about 558 crores. Now with the reduction of debt, but because interest rates have also gone up, would it be fair to assume that interest costs could maybe come down by 30-35% or maybe slightly more than that in FY23 itself?
Yes. So interest has again 2 components. One is India business, one is overseas business. So overseas interest cost post-closing will disappear, but closing is likely to place in 3 to 6 months, right? So the benefit would only come for last few months of the current year. So major benefit you would actually see the next year. But another important point to see is that compared to if you look at 21, 22, we already got some benefit. The India interest cost has also gone down substantially with the restructuring we did with the India piece. And there, India used to be about 450 crore rupees of interest cost. And now that will be down to 225 to 250 crore. So that is already factored in post the restructuring which completed in March with the India resolution. And this was the second step. And third step is now to further deleverage as we move forward.
So you were effectively saying from 558, you would anyways be around sub 250 because of the restructuring that has already happened, right? Because the overseas debt has disappeared.
No, that would disappear post-closing, right?
Post-closing, yeah. Okay.
Comes in the next year.
Sure. I stand corrected. Okay, a couple of things that I borrowed from your press release, Mr. Jain. We'll go through this very quickly. So you said that Jain Irrigation will have a long-term supply agreement with the merged entity, which could drive revenues and profits. Can you talk a bit about that? Would the India part supply to the global part that you entered into the contract with Rivulis?
Yes. So we are signing a 10-year agreement for supply to Merchco. Let's call it, it's going to be Rivulis in alliance with Jain International, that Merchco. And so we will continue to supply product to them. And earlier, our own subsidiaries used to buy from us, right, overseas. Now, the Rivulis part also would be buying. That's because it's a merger. So overall export should grow through this effort. We have still retained India and Indian subcontinent, like all the 6-7 countries around India. Those we will be servicing directly out of India. Also, there are these government-backed irrigation projects in Africa and other places subfunded by Exim. Those we will continue to do directly in India. And the rest we will continue to do through them. So, but the rest of the markets, we will not be directly going there because it's understood that you can't have 2 brands. Because the Merchco would be continue to be using Jain brand.
Of course.
Wherever its presence.
So how much of an uptick do you reckon it would come in? Because Rivulis would be, I believe, sizably larger. The Merchco, of course, is larger. But since you have 22% in the Merchco, I'm presuming that on a size apple-to-apple comparison, Rivulis would have larger. So therefore, do you reckon that immediately in FY23 itself, you could have higher revenues of supplies that you used to do to the overseas entities?
I think that will start from next year. But just on that comparison quickly. So while we own 22% stock, actually our overseas business was about $350 million. Then it is close to $400 million plus.
Okay.
So in normal course, as a merger, we would be close to almost 50-50. The reason we have a lower shareholding is because we've taken so much of cash to pay off the debt, right? So it's a cash and stock deal. That's how our holding is.
Got it. Last couple of questions. You've mentioned, of course, you've retained the minority stake. Yeah. When I'm looking at the numbers, Mr. Jain, compared to what you did in FY20 and FY21, on the revenues as well as on the profitability, or I presume you were a net loss-making company 20 and 21. 22, things have turned around, as I look at it, quite materially.
Yes.
So what went right in FY22? And how does that improve in FY23 and most importantly in FY24, when a lot of benefits from the merger or rather this transaction also come into play?
Yes. So, 20 and 21, we had impact. Everybody had some level of impact because of COVID and pandemic. But more than that, late 19, we suffered because of the delay in receiving a lot of funds from the various state governments who were doing the projects and subsidy. And that resulted into and having defaults with the banks or the delays in payments. So the operations were kind of frozen. So capacity utilization came down. That's how we had a lot of losses. And we were also booking interest full, during accruing interest full through the P&L. Post March 22, we got the restructuring done in India. So some of the interest which was already accrued earlier got reversed. So that gain we received during the March 22. But March 22 year also we improved the standalone India operation from about 2,000 to 2,800 crores. So there was a growth and profitability in India. But more important also our overseas business. If you look at my overseas business profitability in 1920, it was hardly about $23-24 million. Now that March 22, it grew to $48 million. So they more than doubled their earnings also during most difficult period, one would say. So I think our people, our teams have really done extraordinary job. Now that's how 22 became far better than the earlier period. Going forward in 23-24, what's going to happen? One, we think India business is going to grow substantially. That we definitely see that India business will grow substantially. And with that growth will come additional profitability, additional cash flow. So that would help further reduce the debt and improve margins. Second, from overseas business, that EBITDA which was there in 22 will not be with us in 23. However, that is also going to be a profitable company. So their net profit will get added to our bottom line, to our P&L. And going into 24, with this new platform, with the reduced debt and reduced interest cost, our underlying businesses, which are most profitable businesses, the drip irrigation planting material, right? And there we see a lot of retail growth because we're putting more dealer network in northern and eastern parts of India, where we're not selling more. We would have completed the old government legacy projects and got out of it, so that would further free up the cash. So as a combination, and this would allow us also, I would say, to buy raw materials, etc., in a much better way. And as we increase more capacity utilization, fixed cost absorption will become better. So overall, we see going forward over next 2-3 years, company to sustain a very good high double-digit level of growth into its core businesses, and creating internal accruals through free cash flow, which would help us to reduce the debt. And meanwhile, rebuild also the food part, which is a subsidiary, and that also suffered during this period. Our focus is also on to rebuild the food part through multiple initiatives, because that is another business which is not in the focus right now as we speak about this. But I think that will also have a value monetization opportunities as we go in the future. So the idea again is to further reduce the debt what is available in India, further continue to reduce the interest cost, and improve the cash flow generation.
So net profit margins, which are about 4.5%, if I'm not wrong, FY22, you could see significant upsides FY24.
Yeah, absolutely.
Okay, great. Wish you all the best, Mr. Jain. Congratulations on the deal again, and thanks so much for speaking to us.
Thank you, Nash. Thank you.
Pleasure was ours. Viewers, thanks for tuning in.